Hey, what's up, family? We back again with another video. Welcome to the Brights Camera channel, where we talk about everything personal finance, how to make money, and how to keep it. So I know wrapping your mind around investing can be really hard for a lot of people, especially when you're in the middle of fire and you're actually losing your money. But have no fear. This is the best time and one of the greatest opportunities for you to make even more money. So in this video, I'll be breaking down how you can actually make money when the stock is going down. So first, let me break down how you make money on stocks for my true beginners. Whenever you buy a stock, it is sold to you at a specific share price. The money that the stock is worth after it rises or falls is equal to your profit or loss in this individual stock. This is represented in a dollar amount and also a percentage. So for example, if you bought a stock at $50 and in 2 months it doubled to $100, then this would be a 100% return from your initial buy. So whatever you bought initially will be doubling in value. So everything in the stock market is relative to where you got in. So it's not always about how good a company is, but it's about what price did you buy this company at. So I know what you're asking. If this is true, then how do I make money when a stock is going down? This is all due to average cost basis. All average cost basis is the total amount of money you have invested divided by the number of shares you have of this stock. Or to better explain, the average price of a specific stock if you bought at different prices. So let's go back to the example with the $100 stock. So if you were to buy one stock at $100 and then it goes down to $50, instead of you selling this stock and taking a loss, you can then buy the stock back at this $50 price, and then your average cost basis would be 100 plus 50 divided by 2 shares, and then your average cost basis would be equal to $75. So if the stock were to go to the original price back to $100, then this would be a 33% change, and this would be a gain instead of you being at break even. Another example would be you buying a stock at $20 and then the stock completely plummets and goes down to $5. This is a 75% loss in your total value of the stock. But if you were to reinvest in this stock at this price of $5 and buy 2 shares, the total amount invested would be $30 and the amount of shares you would have would be 3. So this brings your cost basis down to $10. Just by getting to the price that you bought in at, this will be a double of your money, and you will be making profit on a stock that you bought at fair value. This is why all the biggest investors out there say you need to be investing money when all stocks are plummeting and everybody around you is fearful. Stock market crashes are the biggest opportunity for you to make any money. There should honestly be no fear when it comes to a stock going down, because you have to think about it as a sale price. If you go to your favorite shopping store and you see that all your favorite clothes are on a 50% discount, would you be upset about it? Would you be mad in any way, shape, or form? Of course not, because this means you get more for your buck.
I'm having good money, good drip. Alexander McQueen.
You need to bring this mindset to buying and investing in stocks, because the cheaper the price is, the more opportunity for upside you have. This investment strategy is a great way for you to add money to a good position on a stock you have, and you're able to build up a bigger portfolio at a cheaper price. There is no stock out there that won't have its highs and its lows, and there'll always be times when a stock isn't valued at its proper worth. If it's a good fundamental stock, make sure that you understand why you're buying in. And even if you're not an investor that knows a lot about stocks, you can always buy into exchange traded funds, which are big piles of stocks that you might be familiar with. And this is a way for you to diversify and lower the risk on your investment. Investing in the stock market is one of the only free lunches out there, and you need to participate. This is the best place to put your money because you never have to worry about maintenance. It's very low cost, and you're able to make money in your sleep without doing any prior work. So one thing you can start doing is looking for damaged stocks that are 5 to 10% down from the all-time high, and really start researching why these stocks are going lower. Ask yourself the likelihood of it returning to the old high, and make sure you don't miss the move. This applies to stocks, crypto, real estate, anything that you can buy and sell. You always want to buy low and sell high. But we don't sell anything because we buy and hold for the rest of our life, and we're going to die rich because we're going to hold and borrow and borrow and borrow and borrow. But that's for another video. So with that being said, you guys, I appreciate you for watching this video, and hopefully I changed your mindset so you're not so fearful when you see a stock going down. I would appreciate it so much if you would comment on the video down below something that you learned or something that I can explain better so I can give you more value. I also want to say I'm extremely proud of you for watching this video all the way through, because you're taking one of the first steps of education when it comes to your financial freedom future. So with that being said, let's start buying these stocks at these low prices so we can ride them all the way up to the high and keep getting better, one day at a time.